Hi, my name is Joey Finro. I am a local real estate agent in Orange County, California. I specialize in not only helping families buy and sell residential real estate, but I also specialize in helping investors buy investment properties in Orange County and a little bit outside of Orange County, such as single family homes and multiple units. And I want to go over today, the goal for this video is to explain why do we see investors start small and work their way up to buy bigger and more units as time goes on. It's actually a very common theme that you see. You'll hear constant stories that years ago they started out buying a small single family home, and then they bought 2 and 3, and then they sold them all and bought multiple units. And so in this video, I'm going to explain why I see my clients doing that. Why is that a common theme that you're going to see with investors to do over time and as time goes on, and go through some of the pros and cons. Okay, so the reason why we see investors start small is because a lot of times investors, and even I see this in myself, they start small because that's their resources that they have. They don't have the resources to buy a duplex or 4 units or a 20-unit apartment building. It costs a lot. The down payment, 20% or 30% of the down payment is just more funds to come up with. And so that's why you generally see investors that are starting out, they start small with 1 or 2 or 3 single family homes, one at a time. They save up, they buy one, then they put their head down, work hard, save up the next down payment, and buy the next one. It's more achievable and it's more maybe quicker to get 1 or 2 single family homes over a period of time than a 4 or an 8-unit apartment building, maybe 20 years down the line. So they wanted to get in the game. And that's also important about real estate, and especially real estate investing, is getting in the game and starting and having the equity start earlier on, for the simple reason why I've never heard somebody that bought a property 30 years ago and then 30 years later today, once the home's paid off or the asset is paid off, I've never heard somebody say, I wish I didn't buy that property. You will never hear anybody that's a homeowner or a real estate investor say, I wish I didn't buy that property once it's paid off, right? Because now you're in the money. You have no loan debt. The only debt that you have is taxes, insurance, and maybe some repairs and whatnot. But over time, real estate tends to appreciate, and getting in the game and allowing that ball to start working in your behalf, I think that's why investors tend to start small, because this is what they can manage. Now, why you see investors trading up is because I'll speak to my personal examples. I don't want to say in general for everybody that invests into real estate, but in my personal experience with the clients that I am working with, is as they trade up, a couple things are in their favor. Number one, they can do what's called a 1031 exchange, and this defers their gain, where they don't have to pay any taxes on their gain of the sale. Let's say they bought $1 million home 5 years ago. Today it's worth 1.5. That $500,000 gain, let's just say hypothetically that's after expenses and fees, that $500,000 gain, as long as they roll that into, and they can't touch the funds, as long as they roll all of that into the next property, and the next property, if they sold their first property at 1.5, as long as the next one that they buy is 1.5 or greater, and they don't receive any of those funds and they roll it all into the next property, they're delaying paying capital gains tax. And so one of the reasons is because they're able to defer the taxes as they buy bigger and better. They can't buy less than 1.5 in this example unless they want to start paying some of the taxes. Somebody that's experienced in a professional in CPA and 1031 exchanges to give you further details and to confirm all that information. And then lastly, what I'll probably focus on is going to be, it's easier to find cash flow with multiple units, and it's easier to manage. So I'm going to dive a little bit deeper on both of those, but as you buy a little bit bigger and more expensive of a property, I have done a video on this, comparing a single family home versus a 4-unit apartment building. A 4-unit apartment building is not 4 times the price of a single family home. It might be about 50%, 60% higher in price, but you get more than double the income, more than double the income than a single family home. So you're not having to pay double the price. However, at that one-time purchase, you are paying a larger amount of down payment and closing costs than a single family. So you can scale to cash flow and to scale to have more cash flow with more units than you can with one single family home at a time. The cash flow would look better to have multiple units rather than 1 or 2 single family homes. Now, the benefit of single family homes is they do tend to appreciate higher than apartment buildings. So that is going to be the benefit of single family homes. You're going to have higher appreciation, but with units, what you will have is going to be higher cash flow. And as you buy a 4-unit apartment building compared to 3 or 4 single family homes, with a 4-unit apartment building, it's 1 insurance policy a year versus 3 or 4 with single family homes. When you have apartment building, you're going to have a handyman. It's 1 property for that handyman to manage. And so the handyman is going to the property. They might knock out a couple other repairs while they're there. It's a little bit more convenient to manage and then also to pay property taxes. It's 1 property tax bill for the 4 units, not 4 different ones for 4 different single family homes. So it's just going to be easier to maintain, easier to cash flow. You are going to have a little bit less, not astronomical, but a little bit less appreciation than the single family homes. But for those reasons, for cash flow, easy to maintain, and then also easy to exchange and to roll your money in and defer your gains. These are the reasons why I'm seeing my clients and my investors and even myself are choosing to rolling into units and then over time continue to exchange upwards. But these are the reasons why investors are choosing to, instead of buy 100 single family homes, they're going after hundreds of apartment door units. For more videos like this, again, subscribe, comment, share. I'm going to leave some information in the comments below. Thank you very much for watching this video, and I'll see you in the next one.